G'day everyone, and welcome again to this ShareCafe Hidden Gems webinar. We have an absolutely cracking lineup today with some very well followed companies with very large, loyal retail shareholder base. So remember to ask questions of our presenters today, and we'll get to as many of those as we possibly can. Otherwise, we'll send through questions directly to management as follow-up. We have over 500 registered, so rather than hear from me, let's make a quick start. Remember, all these webinars will be on ShareCafe next week and or on our YouTube channel. First up, we have Volpara Health, ASX code VHT, market cap of around $315 million, a one-year return of -8%. The company provides clinically validated AI-powered software for personalised screening and early detection of breast cancer. We have with us their CEO, Ralph Highnam. Ralph, over to you. Thanks for your time.
Cool. Thank you, Tim, and thank you everyone for your time today. I'm going to give you a quick, tell you some story about Volpara and give you some of the highlights of our financial year results, which we published yesterday. Let's start off by saying we're on a mission to save lives from breast cancer, and we're going to do that by improving breast cancer detection today, with an ultimate aim actually to moving it all the way over to prevention. We'll come back to that as we go through the talk. Breast cancer kills 600,000 women a year globally. 40,000 or so of those are in the US each year, and thousands of those are across Australia and New Zealand. The key to breast cancer is if you detect it early, you can treat it, and the survival rates are very good. And that's prompted screening programs around the world to come up. And if you look on the left there, that diagram, you can see the size of the objects which are found at breast cancer screening using mammograms, breast x-rays, right the way across on the right there. If you find it by, for example, touching the breast and feeling a lump, an accidental discovery. So the aim of screening, detect it early, detect it small, and so on. Breast cancer screening is proved to save lives, but cancers are missed. It does generate false positives. Next generation breast cancer screening now is well underway. It's going to be personalized. It's going to be personalized around breast composition and a woman's breast cancer risk. So if we move to the next slide, please. Let's talk about breast composition then. This is some of our key science. We are at heart an AI company, and the key kind of science behind Volpara is all about automatic and objective measurements of the breast, bit of breast composition, breast positioning, radiation dose, and so on. And we're going to talk about how that science is embedded throughout our products during this talk. This is about breast composition though to start with, or as people call it, breast density. The breast consists of fibroglandular tissue, which people call dense tissue, and fatty tissue. So if you look on the left there, the A is a very fatty breast, and then the D with all the white tissue, that white tissue, dense tissue, that's what we call a dense breast. The more dense tissue you have, the higher your risk of developing cancer, but also the higher the risk of that cancer being missed at screening. So if you look at those x-rays again, if you look at the A example, you'll see the little white star is very visible against the background, whereas on the D, the white star, which is mimicking cancer, is very hard to see. So it's a double whammy for women with dense breasts. One of our core technologies and core scientific discoveries over the years has been how to compute a volumetric density score from these images. That's what we call true density. That's the percentage of the breast which is dense tissue. We've been incredibly clinically validated, over 300 publications. It's covered by multiple patents. It's the only commercial density tool in the world's leading breast cancer risk model, Tyrer-Cuzick. And you see down there on the left some of the Volpara scorecard, giving you the volumetric breast density for this woman, 6.7%, and some metrics about her breast tissue, such as breast volume, being around 800 cubic centimeters. So breast density is very, very important. Academically, it's been known about since the 1970s. On the right-hand side there, you'll see Nancy Capello. Nancy Capello had breast x-rays done for 10 years. Each time she got a letter from the radiologist afterwards saying, "Hi Nancy, we couldn't see any signs of cancer, see you next year." And then one day Nancy got the letter, had a shower, felt a lump in the breast, and realized she had quite advanced stage breast cancer, which would end up killing her something like 10 years later. In between that time, though, Nancy went back to the radiologist and said, "Why have you missed my cancer?" And the radiologist said to Nancy, "Sorry, Nancy, you had dense breast tissue, so therefore we couldn't actually see it." That drove Nancy then to demand that all women should know their breast density. And that's why the US now is leading personalized breast cancer screening around by not only telling women their breast density, but actually doing something about it. So we go to the next slide, please. So that kind of science, that key AI skills to make things automatic and objective measurements is embedded in all our products. This is our what we call a Papaya breast health platform, and each of these is a Papaya product. So a woman walks into a clinic now, she enters her data such as family history, BMI, we generate a density score, we can tell that woman her lifetime risk of developing cancer, and the doctors then can start personalizing her screening based around that risk. It might be X-ray and ultrasound, or it might be X-ray and MRI, or it might be X-ray and you need some genetics testing as well, just to make sure you don't have the BRCA genes. She has some X-rays done. Our product helps train the technologists there and educates them about good or bad image quality. That's the live product. And then the radiologist sits down with the Volpara scorecard and the images. Their job is to detect cancer early. They do so in the full knowledge of the patient's risk and her density, thanks to our scorecard. Radiologist does a report, and all that information then is embedded into patient letter, which is our patient hub product over there on the right-hand side. All the data then flows up into the cloud, where our patient hub and analytics programs process all that data and show you trends. So we can show you trends in radiation dose. We can say one of your machines is over-compressing the breast, which is why you're generating lots of complaints, or one of your machines is giving high radiation dose and it needs to be fixed, or so on. So the key to personalization of breast care is good objective measurements, but also a smooth IT workflow. And that's really what's made us a leading company in this space globally. Next slide, please. Over the years then, we've done a lot of organic growth, very strong organic growth, but also we've pursued some inorganic M&A to bring in special skills. So the one on the left there, June 2019, was about bringing in patient data and the patient hub product. We had the images, we want the patient data to go alongside it. And then earlier this year, we brought a Boston-based company, CRA Health, because they're world experts in risk and genetics. Now combined, Volpara's expertise in density, the patient data, the images, and now the risk and genetics. Our aim as a company is to obviously be commercially successful, but as we do so, to collect data to help us generate more products, better products, but also ultimately try to move the game, shift the paradigm from early detection all the way through to prevention. Let's predict breast cancer, or who might develop breast cancer in advance to far greater accuracy than possible today. Let's start monitoring the women who are at high risk and look for subtle changes in the breast tissue over time. And then if cancer does occur, let's make sure we detect it very early. So all these acquisitions have been very strategic in nature, all leading us towards that big goal. Next slide, please. So let's go through some of the metrics, and then we'll come on to the financial year results. We are a SaaS company, and we are a software company, just to reiterate that. At the end of March, we're up 18.6 million of annual recurring revenue. That was 60% or so up over the year, and that includes 20% organic growth. The market we operate in is very big. We estimate it to be $750 million of annual recurring revenue. Obviously, then there's huge growth yet to go. And even though we're covering 32% of the market at the moment, that is 32% being covered with just one product. And to get to that 750 million, we need to roll out all our products that we just talked about across all those 40 million or 92 million women across the world. So lots of growth to go, but we're very pleased with where we are. We're very pleased during this COVID period, especially, to have such strong growth. Next slide, please. Let's talk a bit about Arpu. As our average Arpu at the moment is $1.40. That's a blended Arpu, and it's kind of on the lower side because many of that 32% of women covered Many of them are being used by only one product, which has got very low Arpu because it was sold on a capital contract. As we move those capital contracts onto SaaS contracts, we are seeing big jumps in the Arpu at those sites. The average Arpu in Q4 was actually $2.50, and recently we published 7 or 8 customers, some of our favorite customer deals, which really show that pathway to $10, and that's that down there at the bottom. Let's go on to the next slide, please. Just running through then, US, we have a fantastic coverage, obviously 32%, but also we have some very big sites, MD Anderson, MSK, and we are waiting for the FDA as well to take on Nancy's message and make breast density reporting mandatory for all women. That was reiterated. The FDA is seriously looking at in February, and we're still waiting for final confirmation of when that will happen. Next slide, please. We are, though, a global company, a lot of focus on Australia and New Zealand. We have a big private presence now in Australia in particular, and we're doing lots of work on the public screening programs. Queensland we announced earlier this year, and we have another one in the bag as well, which has been on pause due to COVID, but we understand that's starting to move pretty progressively forward now towards implementation. Next slide, please. Yeah, look, just touching on Fy20 Run Results, very pleasing. Revenue was up 57% or so to just under 20 million. Almost all of it now is SaaS revenue, again, which is excellent for recurring revenue. Very pleasing to us as a business. We've done a lot of work on scaling the business, and that's really showing now in a 20% or so or improvement in costs and burn over that period. Very strong cash position, 32 million, and again, making things more scalable. Gross margin is now 91%, up from 86%. So we've had a very strong year in terms of growth, plus making the company scalable. Next slide, please. Year ahead, we very much now talk about accelerate out COVID. We see a lot of confidence now in the US market in particular. We're going to focus on risk and genetics, but with a laser focus onto the install base, which is obviously ripe for upsells. And also, though, we fully understand now the US market and who our ideal customers are for new sales growth. With that, we are very confident in the year ahead, and our guidance around revenue is to exceed $25 million. So yeah, looking forward to the year ahead, collecting that data and slowly but surely moving towards our goal as a company, which is moving the paradigm from detection all the way through to prevention. So Tim, with that, open for questions.
I was coming. My mouse wasn't working. I'm sorry, Ralph. Ralph, a fantastic product addressing a very big problem. Who is the client and who owns the data? So your clients are clinics and hospitals, and does the woman own the data, and is that data transferable?
Yeah, so in the US, our customer very much is the radiologist and the breast imaging sites. The data is owned by the site, but the women in the US have rights to rights to access the data and get access to the data. As with all these things, it can be quite convoluted, but the US laws around this stuff are pretty clear. And remember as well, we are totally committed to doing the right thing legally and morally. And almost all the data that we collect and use, we're allowed to use it for product development, but we're not allowed to sell it, for example.
And from a customer acquisition perspective, is the plan to kind of upsell the existing client base?
Yeah, no, absolutely. That existing client base is absolutely, it has been critical to us over this last year because there's been no trade shows and so on. But it represents a very rich opportunity for upselling this year. And our US sales team is really laser focused onto it.
And talking about COVID, what was the impact there for you over the last 12 months or so?
Yeah, great question, Tim. Obviously, it's been an extremely stressful period, I think, for everyone around the world. Our biggest concern, I think our industry's biggest concern, was screening stopped for 2 years globally. And as a consequence of that, lots of cancers were missed or late stage cancers. started coming through rather than having them detected early. So yeah, I mean, the biggest consequences for women obviously was more late stage cancers, which, as we started out this talk, are harder to treat, and they've got increased mortality linked to them. As a company, we've come out of the year very strongly. COVID almost kick-started making us much more scalable by really making us focus a lot more on being digital, digital videos, digital marketing, and so on. So yeah, we've come out of it strongly, and we're in a great position now to really grow over this next year.
And any competitors in the space? Seems to be a consistent question here.
Yep, there's competition kind of buzzing around kind of each of the individual little products, but no one has the overall compelling platform that we do, and that continues to be a key selling point for what we do. And
one last question, Ralph, in regards to when we become cash flow positive, do you expect?
Yeah, our focus as a company is making the company scalable and showing a pathway to profitability. But at the moment, we're very focused on to growth. But in the background, rest assured, there's lots of work making sure there's a path there to profitability if and when we need it.
Great, thanks, Ralph. Nice to have the company back on our webinars. We'd love to catch up again. Thanks for your time.
Cool, thank you.
Next up, we have Platina Resources, ASX code PGM, with a market cap of around $32 million. The company's had a one-year return of up 196%. The company is a gold-focused explorer targeting world-class provinces in Western Australia. We have with us Corey Nolan, who is the Managing Director. Corey, over to you. Thanks.
Good afternoon, ladies and gentlemen, and thanks for that introduction, Tim. It'd be good to introduce your investors to the Platina gold story. So Platina Resources is a 31 million market cap company. We control a portfolio of precious, specialty and base metal projects and investments. And in the last 12 months, we've implemented a new strategy in the company to become a West Australian focused gold explorer. And as part of that strategy, we've been divesting some of our investments, some of our assets and converting them into investments. And they're currently worth nearly $28 million. And this makes us really unique because we're going to be able to fund all of our West Australian gold exploration activities without having to dilute our share capital structure. Next slide, please. So I'm working with a board of directors. We've got a lot of experience in working with early stage exploration projects, moving them through drilling, feasibility, towards development, and looking at ways of monetizing those assets. Our chairman, Brian Moeller, he's been actively involved with a lot of junior companies, and that includes SolGold, which has now discovered the second largest copper deposit in the last 10 years. And before I joined Platina, I worked quite actively with both Gustavo and Simon Atwell from our technical team. In particular, Gustavo, we were involved in the discovery and development of a lithium project for Sayona Mining in Quebec. We did about 20,000 meters of drilling in that deposit and converted a 400,000 market cap company into a company that's well over $100 million market cap today. Next slide, please. So our key value drivers that are going to create value for this company are our exploration upside that's going to come from our gold properties and also our palladium investments. And we're going to explore those projects by selling our investments as they grow, and that minimizes our future equity dilution. And we still have some assets in our portfolio where we're looking to unlock value for shareholders. Next slide, please. We've got some great tailwinds behind us at the moment as we embark on our new strategy. We've seen fantastic pricing for platinum this year, for gold. Palladium's hit record prices of nearly $3,000 an ounce, and we've seen rhodium up near $30,000 an ounce. So it's been a fantastic year for the metals that we have strong exposure to. Next slide, please. So our strategy is really simple. We're just targeting world-class mineral provinces in Western Australia. We've got one project in the Yilgarn Craton. It's a proven world-class gold province. It's got excellent infrastructure for both exploration and development. And we've also recently signed a conditional term sheet for the Xanadu gold project, which is actually in the Ashburton Basin. It's nestled between the Yilgarn and the Pilbara Craton. It's got a number of significant world-class deposits, but it's an area that we believe is very underexplored and has a lot of potential. Next slide, please. So last month we signed a conditional deal to acquire the Xanadu gold project. It's a project covering nearly 500 square kilometres. It's 38 kilometres from the major mining service centre of Paraburdoo, so we're going to have very cheap logistics. It's adjacent. It's only 7 kilometres away from the Mount Olympus 1.65 million ounce resource. It's already had 350,000 ounces mined out of it, so it's a really attractive region. Next slide, please. So the project's been Xanadu's been explored before. We believe it's been pretty poorly explored. A lot of the drilling's quite shallow, and it was focused around building up a resource for a small heap leach project that compiled nearly 300,000 tonnes of ore at 1.8 grams. But you can see from some of this historical drilling that there's some fantastic intersections, 13 meters at 4 grams, 12 meters at 5. What we want to do is come through and systematically explore this property package and do it some justice. Next slide, please. So what makes this project really attractive is that we're on a major structural setting. We're adjacent to a significant multi-million ounce gold deposit. There's widespread gold mineralization across the package in a really exciting and large, intense hydrothermal alteration zone. We think we've got very favorable rocks here for the discovery of both a large oxide gold system near surface, and at a later date, we want to come back and start exploring at deeper levels and trying to understand where all of this oxide mineralizations come from. And we're just going to do that with a systematic program of geochemistry, geophysics, and drilling. And then we've also got about 25 kilometers of that major structural setting to explore at some point in the future as well. Next slide, please. We also control the 100% of the Challa project. Challa's in the Yilgarn. We've got nearly 300 square kilometers across 2 tenements. It's in a prolific gold producing district between Mount Magnet, Uwandmi, and Sandstone. It's an area that hasn't really had a lot of exploration because it's got a shallow level of outcrop across it, and you have to find some techniques to look through that cover and target the major deposits. Next slide, please. What I really like about this project, particularly our Challa West tenement, is that we've got greenstone rocks which are traversed by the Challa Shear Zone, which is the host to some million-ounce deposits to the north. So what we're doing is a massive soil program across both of our tenements. We've done more than 3,000 samples. We're currently in the process of compiling that data, and that'll generate targets for a planned RAB drilling program that hopefully we can start in the next 4 to 8 weeks. Next slide, please. We also have some other valuable projects in our portfolio. We have a 30% interest in Money, and we've just completed a drilling program there. There's a large deposit of palladium, platinum, gold, and rhodium at Money, and we're currently working with our joint venture partner to move that project towards a JORC 2012 compliant resource. And we're also looking at some options how we can monetize that project to the benefit of our shareholders. We also recently pegged the Naira project, and what we believe we have here is an analogous setting to the Julmar nickel PGE discovery, about 500 kilometers to the south. We think we're on the right structure, we've got the right rocks, and when that's granted in a couple of months, we'll start testing that with soil sampling and geophysics. And we also control the Platina Scandium project. We've got 100% interest of that. It's in New South Wales. It's one of the world's largest and highest grade scandium deposits. We completed a definitive feasibility study in 2018, demonstrating very favorable economics for the project. And the next critical step to getting that project is to identify offtake or investment partners. And that's a process that we've been working through, and we'll continue to look for options to monetize that in the near term. Next slide, please. We've got a $16 million investment over a 10-year period into our scandium project. We don't believe we're getting any value in our market capitalization for that project. This slide shows you two pure play scandium companies with only scandium assets: Imperial Mining and Scandium International, which have 31 and 81 million market caps. We've got a 31 million market cap, including all of those other assets and investments in our portfolio. And then there's a number of other nickel, cobalt, scandium companies that also have significantly higher market capitalizations than Platina. Next slide, please. So just a quick recap on our investments. Our key investment is our 49 million shares in Major Precious Metals. It's worth nearly $24 million. We're expecting big things from Major this year. They've just put out one of the world's largest palladium resources outside of Russia and South Africa. It's nearly 20 million ounces palladium equivalent. They're just gearing up to do a massive 12,500 meter drilling program, which will enable them to complete a feasibility study. So we're expecting big things from that investment this year. And then we also have two smaller investments in Blue Moon Metals and Nelson Resources that we can monetize over time. But we are expecting both of those companies to have drill success. Nelson's drilling right to completing a cap raise. Next slide, please. So just recapping, we've got a 31.5 million market cap. We've got nearly $25 million in investments, $3.2 million cash, which funds our exploration activities in the near term. And we can realize some of those investments to improve our cash position without diluting shareholders. And what this is telling us is that all of our WA gold assets of $3.5 million, which we think is just very, very low. Next slide, please. So we're going to be looking to unlock that value. We'll be planning on drilling programs at Chala and Xanadu, both in the second half of this year. As soon as Mount Naira gets granted, we'll start our exploration activities there. And we're looking at both new gold acquisition opportunities in Western Australia, continuing to unlock the value to the benefit of to our shareholders of those other assets that we have in our portfolio, and funding all those activities by realizing cash from our investments without diluting shareholders. So thank you.
I'll ask some questions if you're ready.
Sure.
So why did you kind of pivot the company to focus on early stage gold exploration, given your asset base there and your other assets?
Yeah, look, what we believe really adds value is exploration and discovery, and I think there's really two great examples that we've seen in the last 12 months. That's De Grey Mining with their Hemi project, and we've seen Chalice with their Julmar discovery, and that's created multi-billion market caps. And there's plenty of other good examples of companies doing extremely well in the last 12 months by going back to drilling and taking projects through feasibility. We haven't given up on our other assets. They're just that they're going to take some time to monetize.
And that includes your New South Wales scandium project. You'll still go ahead with that?
Look, that's the critical part of that is securing the offtake. We consider that project kind of a medium-term project. We've got to find the right customer or investor who can help us find a way to get that product to market so that we can finance and build that project. So it's just going to take a bit of time because the scandium market today is quite small. And that's the challenge.
And if you look at it, you've got a market cap of say 31 million. You've got 27 million of cash and other assets. Will you look to spin off some of those assets if the market value isn't realised in your share price? And do you look to sell some of those assets, a platinum asset, given where the commodity price is?
Yeah, look, so that's exactly what we're looking at doing, and I guess that the best example of our success there is that last year we divested our project in Greenland. We sold that to Major Precious Metals. We secured $500,000 on closing that transaction and 55 million shares in that company. We recently sold 6 million shares and realized $2.75 million in cash, so we can use that to fund our other activities. And we're still sitting on 49 million shares worth nearly $26 million. So that's been a great example of how we can unlock value from our other assets, and we'll continue to pursue opportunities only if they can add value to shareholders.
Great, Corey. That's all we have time for. Nice to have the company on the webinar series. We'll catch up with you again. Thanks for your time.
Thank you very much.
Okay, next up we have Talga Group, ASX code TLG, market cap of $461 million. The company has had a one-year return of up 261%. The company is a battery anode and graphene additives company headquartered in Perth. We have with us the Managing Director, Mark Thompson. Mark, over to you. Thanks for your time.
Thanks very much, guys. Yeah, if we start on the first slide here, it's no surprise, I think, that EVs are a megatrend that's driving a lot of growth in batteries. And I think the difference compared to the last 10 years is that now you're seeing the data come in supporting that rather than it being sometime in the future. So it's well underway now. Next slide. And what's happening is governments are legislating it as well as the markets now pulling it. So you're seeing all the automotives announce plans to go fossil free by certain times. But also it's not just the automotive market. I must say that we're seeing really strong demand in drones, in vertical takeoff and landing, like the personal quadcopters and things like that, and also grid storage. So while it is a big EV story and that's the bulk of the volume of growth, there's actually a huge amount of supporting technologies in mobility and things that are actually flooding into this area as well. And that's driving more demand for batteries and therefore the minerals that make up the battery supply chain. Next slide. And as Elon Musk famously said once, batteries shouldn't be called lithium-ion batteries, they should be called graphite nickel batteries, because graphite is the largest volume of active materials in the battery, in these rechargeable batteries that the market's doing. The demand now is up for over 4.5 million tonnes of coated anode is required in the next 9 years to supply this market. So the World Bank recently announced that graphite was number one on its list of strategic minerals that needed to grow to supply these markets. So graphite is the source material, and it gets turned into anode, which is the 1/2 essentially of the entire lithium-ion battery. Next slide, thanks. And the fastest growth in batteries is actually in Europe. While large volumes exist in other parts of the world, Europe has a huge quantity. In the last 5 years, you've gone essentially from 1 to tens of battery factories being built. They're particularly green in Europe, and the governments are particularly going green as well. So there's actually a network of support for the transition to sustainable electric and mobility that you don't see in other parts of the world. So it's very intense, it's going fast. And currently the anodes, the graphite that supplies this supply chain is currently all 100% imported, so they don't have any local suppliers. Next slide, thanks. So if you were to supply this market, we would suggest to you that outside the existing Asian supply chain, you should be using natural graphite because it's got a lower emissions profile if you responsibly extract it, compared to synthetic graphite, which is based on fossil fuel products and takes a huge amount of energy to process. The electricity for producing it should be as green as possible, shouldn't be a fossil fuel situation on your power supply. And you should be within the continent where the people are using the material. You should have a local supply chain to shorten those pathways, which also lowers your emissions, as well as we've seen with the computer chip shortages. Yeah, it's of much more concern now. The world doesn't operate the way it used to. And so being close to the buyers of the product is important for them now. Next slide, thanks. So we've been operating in Europe for a while. We have a technology group out of Cambridge where the team there works up the products themselves. We've been running a pilot plant in Germany, both for our graphene type products and also for anode products for a while. And we're now constructing an electric vehicle anode plant up in Sweden. Sweden is where our deposit is. So it's a first-class investment jurisdiction. It's been supplying materials down into Europe for literally thousands of years. And it's a great place to operate. While we're ASX listed, we started from here. We moved over to Sweden in 2011 and set up pretty hard there since 2012. And we've been working hard on batteries in the last few years, and it's going very well. Next slide, thanks. Just to point out that one of the differences, I guess, compared to our peers is we do a lot of things in-house. We're truly a battery materials technology company that happens to own its own graphite source, rather than we're a graphite miner that's trying to bolt on downstream things to make everything work. We've had a team of scientists and people that have worked commercially for Toyota, for Tata, for Dyson, or founded companies, and patent holders for a lot of technologies for many years now. And so we interface directly with customers in batteries and auto, so it's not we're not sort of bolting this stuff on. Next slide, thanks. And we produce a range of products, so we're well aware that there's technologies. While all of those battery factories we showed you earlier are currently designed to use graphite anodes exclusively, there is at more expensive batteries where they trickle more silicon into it. They're still mostly graphite, particularly by volume, with a bit of silicon, and that's increasing. So we have a product that we're introducing, and we use our graphene to actually make that product work. And we have some fast charge products as well, which are great. And we even have a solid state product, because solid state batteries, which are very, getting hyped a lot lately, there's no really large scale commercial development of those at the moment. And that's because of lithium metals, extremely hard to work with. And it's been very heartening in the last few days to see Ford come out and support their solid state technology provider. Came out with some more details around that they in fact use a graphite silicon mix rather than lithium metal to try and make this happen. So it's good to see we get agreed with by a few commercial customers in our approach for our product, which is still in development, but it's looking good. And in this way, Talga won't get trapped. We're sort of future-proofed in that we've got big volume, plus we've got the new expansive technologies, and these things will just continue all to grow together, frankly. Next slide, thanks. So we've already published a PFS, and we're just finalising a DFS that's been very COVID delayed, but that's coming up very, very soon. And we've proposed essentially a vertically integrated, so a mine and a concentrator in North Sweden, and then a refinery where you do purification, shaping, and coating. So we produce fully coated material that goes out to customers. We're currently in qualification processes with automotive and battery companies, and we need to scale up. So that's why we're building this EVA plant, an EVA anode plant in Sweden, to continue scaling up the volumes needed. In normal batteries, you don't have to do that so much. It's a shorter sort of sequence, but when you hit automotive, the quality demands are so high, it takes a long time and you have to continuously scale up until you're actually producing material from your near commercial lines to get them over the line. So yeah, we're in that process and quite advanced with some groups. And we have plans to expand. We have a scoping study out there to take our total anode production to over 100,000 tonnes. So we have these parallel growth paths, but I think we need to look at actually getting larger than this already. Next slide, thanks. So just to illustrate that path a little bit, the current, I really actually just want to mention here that unlike other groups that tend to drill out all their resources, their mineral resources first, and then look at the whole thing and look at how big it can be, we've always been very wary of introducing too much material into the market at the wrong time. Now the time is right to expand, but up until now, we've only ever drilled out and done studies on little portions of our deposit to just really feed a particular study and a particular targeted market volume. Going forward, we have plans to expand and actually now look at the full scale of what we have. We have the largest graphite resources in Sweden and the highest grade JORC resources in the world of this type. So it's a very strategic quality. It's a tier 1 asset for the battery supply chain. And I think now is the time to put the pedal to the metal on seeing just where this can go. And that's what our partners and our customers want to explore as well. Next slide, thanks. And this is underpinned by, of course, massive amounts of hydro and wind in Sweden, which makes it very, very low on emissions, which is very attractive, particularly to large automotive groups that are trying to go fossil free or have joined the Paris Agreement. But it helps very much compared to, say, synthetic graphite. So it's very much a positive additive for them for lowering emissions, and we can do it cost effectively there. Next slide, thanks. So currently we're working LKAB, or LKAB as it's pronounced locally, is that's actually the state-owned mining company. They've got a specialty minerals division. LKAB have announced US $50 billion of investment to start up green steel and green mineral type strategic mineral manufacturing up until 2050. It's a huge commitment, and they own all the very profitable iron ore mines around us and towns, and it's the state mining body. There's amazing synergy potential in working with them, and they and Mitsui, who trade battery minerals and are quite involved technologically with a few companies in that space. We're considering joint venture, like co-development of the project together. So we're in those discussions along with the results of the DFS and all the things that are sort of coming along, including the next stages of the project and what's in and what's out and so forth. We've got a whole range of customers that we can't talk about. They're all under NDA. These are just some of the public partners, which include automotive. Some of them are in graphene and materials technologies like Bentley and Bosch. And others are in packaging and other things. But so in general, it's a technology, it's really a carbon technology company and battery materials company, as I said, that owns its own fantastic source of carbon. Next slide, thanks. We've got $58 million of cash into last quarter. So you've still got north of 50 now, you would imagine. I guess the point here is I'm the largest shareholder, so I've got skin in the game. And we've got a range of nice quality Australian institutions and people particularly interested in ESG of their investments. And also down the bottom there, you'll see Yandel there. That's Mr. Mark Creasy, who some of you may know in Australia. We're just continuing to grow, I would say. So there's various travails, but yeah, we're on the right path to continue to become the value that I think our current investors already have in mind. And I think we're in good shape to execute on that over the rest of this year. And at that, if there's any time left for questions, I'm glad to take them.
There is, Mark, and you're bang on time. Great presentation, thank you. A couple of questions here. Can you give us a summary of the mining approvals process and the key risks in obtaining approvals, and what are you doing to mitigate some of those risks?
Yep. So the normal pathway is to apply for an exploitation license and then environmental licenses and then Natura 2000 licenses. So it's a 3-tier system. And we've seen that process take a long time previously with other companies. So Talga innovated and did all three. We invested quite heavily in doing all of them together. So all the government departments have got all the same information all at the same time. And that we've put in all that paperwork and last year, and those processes are going with the government. We've currently got approvals to mine 25% of our planned commercial output in the initial study. Over the next few years, we can mine 25%, and in that time, we expect to get the full-scale permits. What we're doing to mitigate it is exactly that. The trial mine type material provides us with bulk up to 5,000 or 6,000 tonnes of anode. We can therefore produce to put into the market over the next several years as the ramp up to the commercial production to put that material out to automotive type customers in the C and D sample stage. So it's I understand that people look at the history of Sweden in a certain way, but we've got to understand some of those other projects, they're extremely big, and we're up in the mountains. We're down from the mountains. We're in a lot more, shall we say, executable place. And being a green type strategic battery supply project and vertically integrated locally, I think gives us the best possible chance. And we expect to get those approvals next year.
And in terms of funding, Europe has been very commercial from a government body perspective. Is there any possibility of working with the European Battery Alliance to secure financing to kind of accelerate production?
Yeah, we're already members of all those things. Actually, we're on the committees of some of them. So we're actually some of our staff actually help write the legislation for some of these things. They're involved. So we haven't really made a big deal out of it, but I guess one day we should list all of them. But yeah, we're heavily involved in a lot of those organizations. They've got pros and cons about timing and about who owns what and when and how. But in general, you'd have to say that the cost of debt for investments in the green space in Europe is super low. And there's many opportunities for getting actually zero cost, like grant type funding development for some of these things. So yeah, we're exploring all those options now, and we've got Morgan Stanley is appointed as advisors, and other groups as well, and Macquarie out of London. They're all working with us on looking for the best ways to do it. Probably why we're not talking about it much is we're not sure of what the delta is on the gap that from our potential joint venture partners versus what Talga will be up for, as it were. But I think we're in the best possible shape to minimise the what the costs will be.
And it seems to be a real balancing act in terms of having an offtake partner, finding funding, and bringing all that together. Is that a fair summation?
Look, to be honest, this is challenging. It's not easy. There's a lot of barriers to entry on becoming an actual anode company like a Mitsubishi or Hitachi, instead of just selling cons or purifying them. It's very difficult, to be honest. So it's because it's all very chicken and egg. They want to see the production before they commit to buying. So it's like you have to build it, and then they will say, okay, well, now you're actually in production, we can make those commitments to you. But before then, they're not sure. These commitments, like some of the contracts we're talking to people about, are up to 15 years, and up to definitely a lot of them are about 8 years, which is about the life for a model of a car. So, and it's qualification per model. It's not qualification per company. So yeah, there's a lot of chicken and egg situations. So we're trying to build like quarter of the chicken and quarter of the egg to get into the market and go from there. But yeah, it's a complex undertaking, admittedly so, but that's where the revenues are, is down that the downstream.
And ESG principles are obviously very important. You've got some ESG style investors on your register. How clean is the process? We know that the battery makers look at how clean those ingredients are, for want of a better word, that go into that batteries. Can you talk to your ESG credentials? Yeah,
well, I guess on the purely on an emissions point of view, not all ESG. I guess I would say that, like, socially, stakeholder wise and governance wise, I would think things are pretty healthy as they go. This is a very high grade deposit, so it moves less tons than other things. So while other people with graphite mines are talking about mining, like, say, 2 million tons a year or 4 million tons per year, we're only mining 100,000 tons per year to get the same sort of amount of anode, because our anode yields are super high. So to be honest, compared to your current existing supply chain that's in synthetics and offshoots of natural now, like, this is actually a massive improvement in any way you cut it. So environmentally, socially, and governance, obviously, in Sweden as a jurisdiction and with us as a public company, I would say is all very high. From a processing point of view, I've got to say a lot of Asian customers, they're not that concerned about emissions. They're worried about people legislating against it, but they're not really dedicated to it. They're very cost focused, to be honest. And we're only seeing small premiums in discussions with car makers. With most of them, there is a potential premium on a greener product. I think a large part of the OPEX of your emission signature is in your electricity, which is very clean for us. So with hydro and wind, with the rest of the process, we've developed things like the various concoctions of doing it chemically, and we've also looked at thermal And I think that there's just some ways that are better to do it in reality when you look at the whole life cycle of the products. And I think we can do it a lot cleaner than what's currently being done, but I wouldn't elaborate on details other than we're very conscious of it and our customers are conscious of it, and everyone's pretty comfortable with what we're doing right now. And we're also starting up some programs looking at recycling. At the moment, there's actually no evidence that we've seen anywhere in the world that people can recycle carbon back into an anode for a battery. They can purify the carbon, but that's different from proving that then it lithiates and makes a commercial anode again. And so we're interested in investing in that and seeing if we can set up a recycling loop on some of the materials. But right now, it's possible that you can't actually bring it back. You can purify it and use it for recarburizers or something. It doesn't mean you can reuse it in a battery. So these are areas that the industry hasn't had to face before, and we're really, it's very exciting to work on these whole range of solutions, both commercially and technically, to bring some innovation and some modern tech out of Australia into this area.
Great, thanks, Mark. Really appreciate your time. Love to have you back on. Have a nice weekend.
Anytime, you too. Cheers, bye.
Next up, we have Andromeda, ASX code ADN, market cap of $442 million. The company's had a one-year return of up 200%. Andromeda is focused on developing the Kerryswell halloysite kaolin deposit in South Australia. We welcome back the Managing Director, James Marsh. James, over to you, mate.
Thank you, Tim, and hello, everybody. Welcome to Andromeda. Just make a slight correction there. It is actually the Great White Project now, so that's our new name. And I'll start off by giving you a corporate overview. This presentation will be a summary of where we are with the project, but also focusing a bit more on new developments that I hope you'll find quite exciting. So at the moment, we're looking at market cap. Well, actually, these numbers have shifted a bit today due to announcement this morning. But market cap's about 400 to 500 million. We've got about 6.7 million cash, no debt. And you'll see there that the share price has taken a bit of a hit lately, but that's not due to anything but normal circumstances with a project that's moving into production phase. So nothing unusual there. The fundamentals are still very strong and nothing has changed at all. We've got a very strong board, experienced in all the areas required for this sort of project. So we're well covered in marketing, production, geology, and finance. Next slide, please. So our number one focus at the moment is on the Great White Project. This is a joint venture, 75-25 with Minotaur Exploration. We also have Mount Hope, which is 100% owned by Andromeda, all in South Australia. We also have a 50-50 joint venture with Minotaur, and that is an IP company that's conducting a lot of research into nanotechnologies, which I'll talk about shortly. There are some other assets in the company. These assets have been joint ventured out or looking for a new home. So they're actually operated and funding comes from other partners, not ourselves. Next slide, please. So a quick overview of the Great White Project, which, as I said, is our primary focus. This is considered to be the world's largest high purity halloysite kaolin resource. And you'll see the project consists of a number of different resources. The Great White is what the project is based on. There we have about 34 million tons of this material, which is a halloysite kaolin hybrid material. But also there we have Hammerhead right next to it, over 50 million tons. Mount Hope, 100% owned, which is, we've drilled on that. We'll be expanding that resource in due course, but about 20 million tons there. And these resources are comprised of a mixture of either very pure kaolin, very pure halloysite, or the combination of the two. And you'll see that there are, or I'll tell you shortly about the different markets there. There are very different markets and very different prices for those different materials. So at the moment we have well over 100 million tons in combination. We have some LOIs, so letters of intent from customers, which we are converting across to binding offtakes in ceramics at the moment. It's located to a number of ports, so we've got the very important shipping capability to get this product to market. We're also working on a number of nanotechnology opportunities, and they're moving fast, rapidly. And as you'll hear, we've now made our first serious move into the HPA space. Next slide, please. So I think at this point it's worth expanding a bit more on the market, because kaolin and industrial minerals, now the mining is very simple, and the geology is relatively simple, but the very complex part of this is the marketing part of this. So to make any kaolin project successful, there needs to be a huge focus on the marketing. It's a very complex, opaque market. Luckily, we've got some vast experience in this area, and the market for kaolin is extensive. This is about, as you see, about 26 to 27 million tons a year of all sorts of mixed grades. So this total consists of mainly the pure kaolin, but also the hybrid material, halloysite kaolin. And the areas that we're particularly focused on are ceramics and paintings and coatings. So ceramics is a large chunk. You'll see there, there's about 10 to 12 million tons, maximum tons available in ceramics. But the vast bulk of that is made up of the tile area. Tile kaolins are very low value. You're talking maybe $100 a ton maximum for those. Second area there is probably sanitary ware. Sanitary ware is another huge amount of that business, but there you're talking about a maximum value of about $200 a ton. Then you move into the tableware sector and porcelain, and that's the area that we're targeting. Now that's the area that really wants the halloysite version of kaolin, which is what we have. And in that area, you move up to a value of where we sit at around about $700 a ton. So that's where we have the halloysite. That makes the difference. That's what people want, and that's what gives the great results in the real high quality end. Also interesting there, paint and coating sector. We said before that we have a material that looks like it's very interesting for that sector, potentially higher value in the very high quality end of that. And I'll cover that in a bit more detail shortly. But the main point there is also that kaolin is a material that's everywhere in the world. You use it all the time. It's just something you just don't realize you're using. Now you're wearing it, you're driving it in your cars. So it's all over the place, but the value is very different depending on what material you have in the form of kaolin. Next slide, please. So just give you a bit more detail on that differential. So the pure kaolin material is on the left there. That is pure kaolin plates. You see a very plated material. It's a bit like talc. And that is a material that would be used in the main applications around the world for kaolin. So the bulk of that 26, 27 million tons is that material. The pure halloysite in the middle, that material is much more rare. In its pure form, it's extremely rare, and it's worth a lot more money. It goes up, that material goes up to about $5,000 a ton for the pure material. So that's something we're working very hard on identifying in our resources. What we have in the Great White and also in the Mount Hope, we have the hybrid material, which is a combination of the plates and the tubes, and that is what the high quality porcelain ceramic people want. They want that combination that gives the right balance of properties. But as I mentioned before, we do have the pure halloysite and we do have the pure kaolinite. So we are looking at opportunities for those materials as well. Next slide, please. So I'll focus a little bit more on the high purity kaolin that we have. So we have from Great White and from Mount Hope, we found some areas of extremely high purity kaolin, and this is non-halloysite kaolin. But the interesting thing is it's so pure that it actually outperforms anything else that we can find in the world at the moment. So looking at results we're getting there, we're getting results of brightness over 90 or 90 ISO brightness, which is truly world class. Now, there's virtually nothing around in the world that matches that, in combination with the particle size and the yellowness, which are very important. So for the coating sector, that would be a very interesting material, potentially worth Australian dollars, maybe up to 1,000 Australian dollars per ton for the right customer. So we are working on that, and we're looking at how much of that material we have within our resources and doing a lot of background work. Next slide, please. Also, I've talked before about the concrete work. Now, I haven't said much for a while. That's not because we're not doing much. We are doing a lot of work behind the scenes, and we're getting some very interesting results. Previously, I announced that we passed the concrete standards test for this, so it's certified for use in 99% of all concrete in Australia. That was an important piece of work. Since then, we have filed a patent for this material, so that is now been done. It was good to find out that no one else had done that before, so we got in there with that patent. And We've also optimized the product a lot more. So you'll see a picture there with two lumps that look like of concrete material. Well, the material on the right was the starter material for concrete. Since then, we've now moved that onto the one on the left, which shows a lot more structure, and that is a huge improvement in performance. So the graphs on the left were based on the first stage material. Well, we've learned a lot more since then, done a lot of research. We've now found something that actually works much better, is much more effective. So we're now pushing that into concrete testing, and we're doing a very large amount of concrete work in the background. This is an excellent opportunity for us. It's a whole new market for halloysite kaolin. Never been done before, but potentially a very high value market that is truly global. Next slide, please. Also, the nanotechnology work is driving forward in a lot of areas. At the moment, we have a pilot plant under construction for carbon capture using a halloysite produced matrix material. There we're getting results of about 1.4 tons of CO2 absorption per ton of this matrix. But the important thing there is that we can discharge that and keep using it. So we use it over and over again. So 1 ton of the halloysite material can actually capture hundreds of tons of carbon dioxide and convert that to a clean fuel, which will close the loop. Our pilot plant is under construction. We hope to have that going as soon as possible, and that can then be used to demonstrate this and commercialize that opportunity. We're also filing patents in the areas of batteries. So the previous presenter did a good job there, telling you how important anodes are. Well, we're getting some great results with our nanocarbons in anodes. So that patent is planned, and also water purification. And down below, we have a number of other areas we're working on. We have currently 12 projects going now for nanotechnology involving halloysite, and they all have tremendous opportunities. Next slide, please. So this morning we made an announcement about high purity alumina. This is something that we've been looking at quite seriously for well over 2 years. We've known for a long time now that our halloysite kaolin has exactly the right amount of impurities to be excellent for producing high purity alumina, or HPA. We showed that we could get to a 4N product, which is 99.99% pure in 1 stage of purification, which was an outstanding result. So since then, we've been looking for the right opportunity to actually commercialize this as quickly as possible and as safely as possible. So finding something that is highly de-risked, because this technology is a risky technology, but we wanted to find something that was as de-risked as possible, and we believe we have now. So we signed an MOU with Advanced Energy Materials, who have the only operating HPA plant in the world of its type that can produce HPA from kaolin. So the crucial thing here is that they have a plant now that's operating. They have plans to roll a plant out in the UK, which will be equivalent to the plant that we will plan to roll out in Australia. So the plan here will be to have a plant operating based exactly on the UK model, which the UK government is prepared to fund that. So there's been a lot of due diligence done on this already. We are doing our own due diligence now, which is going to be very intensive. That's already kicked off, and we have a large amount of our material has gone out to Canada to be put through that flow sheet to work out exactly what we can get. So this is an exciting development. We believe this will take us through into HPA production as quickly as possible with the lowest risk. And HPA has been recognized widely as a material of the future for batteries, but also not just batteries, for smart flowing glass and for LEDs. So potentially we could be looking at a plant that in Australia that could be using initially maybe 20,000 tons of our material, our kaolin. Now, we haven't decided where that kaolin is going to come from yet. It could come from the joint venture, or it could come from a 100% owned resource. So we're doing work now to work out what the best solution for that would be. Next slide, please. So highlights on what next. The PFS we put out had some very good numbers. So, but we are working through the DFS and BFS right now. So we are reviewing that. We have revised the model to something that we believe is much better for the company and much better for the shareholders. And we're working on that at the moment. We're pushing through the mining approvals, very intensive process, but we have a very simple mining project, low impact. So it's just a case of going through those stages and getting through that process as quickly as we can. We're working on high purity halloysite. We're finding more material all the time. We've done recent drilling and we found material that's approaching 70% pure halloysite in our existing resources. So exciting stuff happening there. Concrete testing will proceed, and we'll try and get that to a commercial stage as quickly as possible, along with nanotechnology and also with the HPA. And we're still looking at breaking ground, if all goes to plan, in February next year. Next slide. I think I'm probably overrunning a bit now, but just quickly, this last slide, briefly, we've got one of the world's largest resources of its type. This is a high-value industrial mineral where demand is increasing steadily, but supply is decreasing dramatically. So there's a big gap in the supply there, which is great for us. Low capex, simple business model. So we're well positioned to become the world's producer of this material. And we've also got a huge upside potential in concrete, HPA, and all these nanotechnology opportunities. Next slide is the end. Thank you very much.
Thanks, James. We've still got a big audience online, so and lots of questions. Can we start around you've got different verticals, cement and HBA and ceramics. Can you talk to us about the pricing of your industrial mineral in terms of those different verticals? Do you target where you get a high margin?
Yeah, so we're lucky that we've got the halloysite version of kaolin. So we've got the real high end of the kaolin market. You know, it's not much of this around in the world, and especially not in the amount that is required, and the proportion of that, and also the purity of that. So that allows us to target the real high end of the ceramics, which is, you know, we're talking about maybe 10% of that ceramic market is the real high end stuff. And the good thing for us is that is the tableware market, which is the bone china type, high quality, but also the porcelain for things like electrical components, where around the world, many parts of the world now, there's been a huge rollout of electrical infrastructure that needs a lot of very high quality porcelain. To make the high quality porcelain, you need a very high quality halloysite kaolin, which we have. So we're targeting that. We're also targeting the high purity halloysite. Now we're doing a lot of work to find out how much high purity halloysite we have, because there's hundreds of patents approved for that, but there's no current supplier that can supply commercial amounts of that material. And as I mentioned, we've drilled recently and found up to I think maximum of 66% pure halloysite of just the right type of tubes in our resources. So we're pushing that forward. And also, if we can convert our real high quality kaolin into the paint market, another great step forward. Into HPA, even bigger step forward, because then it's upgraded to something that could be worth $50,000 per ton. And we believe that we have such pure material that can be done probably at the lowest cost possible in the world.
So you can essentially tailor the product for the different markets.
Correct, yeah. So the plant has been designed. We're doing a great deal of detailed design work on the plant, engineering work, that we can make it simple, first of all, but also we can tailor those products to suit those real high quality markets. So we intend to be, you know, a tier 1 top quality producer of these materials for those markets. So we are working very hard to make sure that we have a state-of-the-art plant that can keep this material extremely consistent over a very long period.
And you are spoiled for choice here. You've previously announced you had letters of intent were signed for over 900,000 tonnes of product for Asian ceramic manufacturers. Can you talk about whether they're going to be converted into binding offtakes?
Yeah, I can. So this is where the complex marketing side of the business comes in. So yeah, I said before, the mining and geology is relatively simple, but the marketing is very hard. So it does take a lot of time, a lot of effort. We've been doing it for several months now. In fact, more than several months, probably over a year. So since we got those LOIs, we've had over a year of intensive work there to push those through to binding offtakes. A crucial factor is that some people won't convert across until you're very close to production. They want to know that this material is going to be available and when it's going to be available exactly. So there's a bit of reticence for people to sign up too soon. But we are approaching a time now where we're getting so close to our production that people will be happy to sign up. So what we're trying to do is make sure we sign up with extremely robust offtake agreements. So nothing flimsy. So there's a lot of work going into this, and you probably appreciate it involves having lawyers at both ends, a lot of to and froing. So we're going through that process. We have been doing it for several months now, and we're making excellent progress in that. And you know, if all goes to plan, we'll be announcing some more binding offtakes in the near future. And
can you talk to kind of a timeline? What can investors look forward to next 12 months. You've got a DFS coming up. Is that the second quarter of this year? And then
Yes.
production perhaps early 2022?
That's correct. So DFS next. So we've put a lot of work into that as well, because we had a lot of new opportunities have cropped up, and we wanted to make sure that we had the best possible DFS out there that incorporated all those opportunities right from the start. So we've changed our model greatly from the original PFS, but believe we have a far superior model coming out. Then we've been moving through the mining approvals. So we're looking at getting approval by end of the year for the mine, which would be another big milestone. And then early next year, going into the operational stage where we break ground and start constructing our plant. So that's all happening for the main game, which is the Great White project. But we're also looking closely now at what we do with the nanotechnology side, how we commercialize that as quickly as possible, how we incorporate the concrete into this, the concrete opportunity, which is getting more and more exciting. And now we've got the HPA, and the HPA, because we've got this potentially is very highly de-risked model, and we're just copying something that's happening overseas that's already going through the same process. We believe that we can get that going very quickly, and that could come along in a very short time frame.
And just a question on that announced today, will the HBA be with your joint venture partners, MEP, or from your 100% owned Mount Hope deposit? I think you touched on that previously.
Yeah, so I mean, the HPA itself is a technology play, so that's under Andromeda. So the plant, we're planning to build a plant to make HPA, but the material could well come from the joint venture, in which case it'll be 75%, 25% of the feed material that goes into that plant. So we're doing work now on that, whether we don't know whether the best material might come from Mount Hope, might come from Great White, and that work is being done at the moment.
And some of these non-core assets, James, is there any thought behind selling those, or taking them out of the business, selling them off?
Not right this time. I think they need to be progressed a bit further. So the joint venture with Cobra, UK listed company, Woodner, is going well. They're just they're doing their more resource work to get the gold resource up. Likewise, a copper joint venture with environmental copper recovery, that's going well, and they're doing some more work on their in situ recovery work. So I think once they're progressed, then we will look at doing that, because as I mentioned before, we're not focused on that. We're letting our partners do all the work. We have got a gold project also in North Queensland that we will look for another home for. But for this time, we're happy to keep them going as they are, and we'll just focus on our main game.
And James, you've got a very loyal shareholder base, retail investors. Is there any significant interest from the institutional investors at this point?
We're moving towards that point. It's situation is a lot of them do need a DFS in place. That's one trigger for them to get involved. But they do have a problem understanding the marketing. As I mentioned before, the marketing is complex, and it's the most difficult part of this business. We feel that we're very well placed to get that sorted out. We have the most experience around to do that. But getting that message across to the actual institutions and to banks, for example, where we're looking to get some bank funding for the project, it takes a lot of work and a lot of effort. So no, we're working on that. We're getting some strategic documents written up that will be suitable for them to review. I think as we move forward and as we get binding offtakes signed up, and as we move forward towards the production, and I'm sure they'll get involved, because this project has potential to be a huge success.
That's great. Thank you, James. Always great to have you back. We've had a big audience online. We've got lots more questions. We're probably out of time. Thanks again, and we'll see you soon.
Thanks, Tim.
Thanks, everyone. Big audience today. Thank you for your time. Enjoy your weekend.